Well, good morning. We're looking at initial jobless claims coming in a little bit lower than forecast. Remember, these are the seasonally adjusted numbers, and there's not a long time series because they changed the way they calculated it. 837,000 last month was last week rather was 870,000. So a big decline there. 850,000 was the forecast. Now, the number that we really want to see to get a better, more accurate description of what's happening with unemployment claims is non-seasonally adjusted. They fall to 786,942 from 827,205. So that's a decline of 40,000. The headline number from the seasonally adjusted, a decline of 36,000. So good news in both cases. Pandemic employment assurance assistance, which is the freelancer stuff that was put in place by the CARES Act, that rises by 35,000 to 650,000 during the week. So still some issues with that, according to the analysts who look at this and whether or not it's completely accurate. Total number of people getting benefits goes up by 485,000 to 26,529,000. So we're still seeing actually, I think what you would say about this report is it's status quo. We did see some declines in initial claims, but we're still seeing an awful lot of declines overall. One other number out this morning, personal income down 2.7%, but spending rises 1%. Both of those much weaker than the prior month.
Michael McKee, I took some fancy math here on your good study, and we had the correct chart up here, folks, on Bloomberg Television. On Bloomberg Radio, all you've got to know is if you take claims to logs, you get a gorgeous straight line, Michael McKee, from June 5th. Why is that? Why is it so well behaved from early June?
Well, I think it's just been sort of a consistent decline in the jobless numbers. Now, if you're using the seasonally adjusted numbers, it's difficult because you did get a series break in there about a month ago. But the non-seasonally adjusted numbers show that we have seen steady declines for the most part, a couple of weeks that were up, but we're still well above that 800,000 number, and we just stay in that range. As I mentioned, a lot of analysts now think there may be something wrong with the statistics. California's halted some of their reporting while they wait to try to figure out whether or not it is good or not, so whether the data are good or not. So it is something to keep in mind. That income and spending number, by the way, one of the interesting aspects of the number from the month of August is that we saw the decline in incomes of 2.7%. That likely reflects the ends of that $600 a week additional unemployment insurance. So the question is, over time, does that start to weigh on consumption?
All right, so just to wrap this all up, Mike, is your impression that the labor market is in better shape than the doom crew, like myself, may give credit to, given the fact that we get these tens of thousands of layoff announcements every day these days, it seems?
No, I'll go with you and your gloomy outlook. We can get together under a black cloud later today. The issue,
sunny spells.
The issue for people at the Fed and for analysts is that what we've got is a lot of people have come back to work because the restrictions are being lifted in many states, and then one of two things happens. Either they find out their company has gone out of business in the meantime, or companies, particularly in the service industry, restaurants, try to reopen and find they just don't have enough customers because people still aren't going back or they're capacity constrained, and they close down again. And that's going to be the issue going forward. The airlines are a perfect example of this because they took government money. They stayed open. They had to keep people on the payrolls until September 30th. Now it's October 1st. They don't have the business. They're getting rid of workers.